Hey investors, and welcome to Stock AI Insights. You're in the earnings intel room, and I'm your AI analyst. Today, we're tearing down Vodafone's first half earnings for fiscal 26, which just dropped on November 11th. And the big headline? Well, management is feeling pretty good, now saying they expect to hit the high end of their financial guidance. So yeah, let's get right into it. But the real story here, the thing that's got everyone buzzing is this. Europe is back. After a really tough stretch, Vodafone's European engine has finally sputtered back to life. This is a huge moment, folks. It's confirmation that their big turnaround plan is actually working. So the question is, how'd they do it, and what does this mean for the whole company? All right, let's kick things off with our first section, decoding that group revenue. This is the top-line story, right? And what you're about to see is that this isn't just a simple turnaround. No. This is about real accelerating momentum, the kind that powers the whole company forward. And boom, here's the number that's grabbing all the headlines. We're talking a plus 5.8% organic jump in group service revenue for the second quarter. Now, let me be clear. This is not just some positive blip on the radar. This is a serious acceleration from the last quarter. It tells us the company's growth engine is really starting to rev up across the board. Okay, so where does that 5.8% come from? This is where it gets really interesting. Just look at this chart. I want you to think of Vodafone like a multi-engine jet, okay? For the longest time, that huge European engine, it was sputtering, barely working. Well, now it's just restarted, showing a little bit of life at 0.5% growth. But at the exact same time, the African engine, man, it's not just running, it's hitting the afterburners at a blistering 13.5%. It's this dual engine power that's pushing the whole thing forward. So it's super important we understand the why behind these numbers. Let's start with Germany. That return to growth is a massive sigh of relief for them. And here's a unique insight for you. This growth isn't just about some brand new success story. It's actually about an old problem finally fading into the rearview mirror. There was this big regulatory headwind from a TV law change. And now that they've lapped it, the year-over-year numbers just look a whole lot better. Meanwhile, you've got the UK showing some nice, solid momentum from broadband. But the real story, the showstopper, is Africa. Just look at Egypt, roaring ahead at over 41%. That's being fueled by huge data demand and the wild success of Vodafone Cash. Okay, strong revenue is great. We love to see it. But as any investor knows, that's only half the story, right? The big question is, does it actually translate to profit? And that brings us to section 2, the profitability engines. Let's pop the hood and take a look at the bottom line, see how all this growth is turning into actual, tangible financial health. And the answer is a big resounding yes. Group adjusted EBITDA, and you can just think of that as a core measure of their operating profit, it grew by an impressive 6.8% in the first half. Now, what's really crucial here is that profit growth is actually outpacing revenue growth. That's what we call operational leverage, and it's a fantastic sign. It means the company isn't just selling more stuff, it's getting way more efficient at turning every one of those sales into actual profit. Now, check out this table. This shows us exactly where that profit is being generated. Germany, no surprise, is still the heavyweight champ here, bringing in 38% of the group's total profit. It's the core. But look at Africa. It's now contributing almost a quarter of the group's profit. That is a seriously significant and, more importantly, a rapidly growing engine for the bottom line. But this next slide, honestly, this might be the most critical insight in this entire earnings report. Because when we shift from just looking at accounting profit to looking at adjusted free cash flow, basically the real cash left over after running the business, the whole story just flips on its head. Take a look. The high-growth African operations, they've become the primary cash cow. They are generating a staggering 2/3 of the group's free cash. So while Germany's profit turnaround is vital, let's be clear, it is Africa's explosive growth that is truly funding this entire business and its returns to all of you, the shareholders. So all this strong performance brings us to the finish line, our third and final section, the forward outlook. You've got revenue accelerating, you've got cash flow pumping. So what is management telling us to expect for the rest of the year? Well, they are definitely not being shy about it. This quote comes straight from the report, and it is a crystal clear, powerful signal of confidence. Management is basically putting their reputation on the line here, telling everyone they expect to perform at the very top end of what they promised for fiscal 26. So what does delivering at the upper end actually mean in cold, hard numbers? This table lays it all out. It means we're not just looking at 11.3 billion euros in profit, we're looking closer to 11.6 billion. And for that all-important free cash flow, it means they're targeting $2.6 billion, not the $2.4 billion at the low end. For you, the investor, this is clear, actionable intelligence about exactly where this company is headed. And for our final unique insight, this confidence isn't just talk. It's being backed up with cold, hard cash being returned directly to shareholders. The company has committed to a progressive dividend policy, and they're specifically planning a 2.5% increase this fiscal year. That shows you management's belief in the strategy is so strong, they're willing to put their money where their mouth is and increase their commitment to investors. All right, so here's the Intel Room verdict. The turnaround in Europe? It's real, and the acceleration in Africa is providing some serious fuel for both growth and, maybe more importantly, for cash flow. If you found this breakdown useful, hey, drop a 1 in the comments for me. And the big question this leaves us all with is, has Vodafone finally, after all this time, unlocked the true value of its massive global footprint? Something to think about. We'll see you in the next earnings brief.